A very warm welcome to PB Fintech Limited earnings call for Q1, financial year 2023-2024. We have today Yashish Dahiya, Chairman and Group CEO, PB Fintech; Alok Bansal, Executive Vice Chairman, PB Fintech; Taravir Singh, Joint Group CEO, PB Fintech; Naveen Kukreja, Co-founder and CEO, Paisabazaar; Mandeep Mehta, Group CFO, PB Fintech. Now I hand over the call to Mr. Yashish Dahiya.
Thanks very much, Rasleen. Very good evening or morning, wherever you're joining us from. Policybazaar and Paisabazaar, which are jointly classified as our core online businesses, both India's leading marketplaces for insurance credit. For the last 5 quarters, adjusted EBITDA has kept on consistently improving by an annual run rate of about 200 crores. It's actually a little more than that. And if you recollect, about 4-5 quarters ago, I had clarified that this would keep happening. We would keep increasing by about 150 crores a year. This is like come out to be slightly higher, just explaining. Q4 is traditionally the strongest quarter. And we've never had a situation where our Q1 has caught up with Q4. But this is the first time when Q1 has beaten Q4. And out of the 516 crores of revenue that the core business made, credit-linked revenue is 134. So just to put in perspective, even the insurance business alone is flat over Q4, which those who follow the insurance industry would appreciate does not usually happen. We're also very pleased that our core engines of value and our prime focus, health and term, grew at approximately 40%. I'm very glad that after almost a period of 2 years, these primary protection engines have started to grow, and month on month we have seen increasing growth. So very pleased about that. Our total insurance premium for the quarter was 3,000 crores, 3,011. Savings has been subdued. Just wanted to mention that over the last quarter and over the last year. Our renewal or trail revenue as an ARR is now 418 crores, which is up from 273 crores at the same quarter last year. Just to put that in perspective again, that's about a delta of 145 crores. And most of this comes at 85% margin. So this is a significant source of profit growth. And that is where, if you look at the 200 crores and you look at this, it all starts to kind of make sense. Our consolidated adjusted EBITDA was a positive 23 crores for Q1, an improvement from minus 66 crores the same quarter last year. That's a delta of 89 crores for 1 quarter. The core online business adjusted EBITDA increased by 64 crores. Our CSAT continues to be at 88%. It's actually 88.4%, and it was in the last quarter, it was 87.9%. But I think let's just stay with 88% for now, and it's doing quite okay. Credit business growth continues to grow well. We now are at an annualized run rate of 16,000 crores, and it's been EBITDA positive since December 22. I think Naveen just got confused whether we are in 23 or 24 already, but that's fine, happens. So 16,000 crores disbursal and 5.8 lakh credit card issuance on an annualized basis. This is on July 23 basis. About 36.9 million consumers who have accessed the credit score platform. 75% of cards issued and 44% of unsecured lending is now happening end-to-end digital. This is a change, and that's what's helping Paisabazaar continuously improve its margins. 75% of disbursals are from existing customers, which is also demonstrating good repeat behavior. The trail revenue is now at 14% of the total credit business revenue. Now, new initiatives. PB Partner, which is the agent aggregator platform, continues to lead the market in scale and efficiency of operations. We have made some changes in focusing towards higher quality advisors. We are operational in 15,400 pin codes across the country, covering 80% of the pin codes. And for those of you who may have seen the numbers and got slightly worried, just don't worry. We stay totally convinced and focused on this part of the business and totally committed to win in it. Our UAE business has grown 2.6x year on year. So we become more confident than we were when I reported to you 3 months ago about delivering the first full year of being PAT positive this year. And happy to take questions now. Thank you.
We'll wait for a minute. Please raise your hand, post which you will be asked to unmute. Hi, Srinath. Please ask your question.
Hi. Hi, Ashish. Just wanted to understand from a contribution perspective, our renewals ARRs have been growing faster than the top line. And so as this mix change happened, one would assume that contribution margins would start going north. So wanted to understand what are the moving parts in contribution, how sticky is the pricing and performance marketing? What has been the growth in performance marketing, both in Paisa and policy? And how do you see the path to contributions margins going northwards, maybe to 47 or 48 over a period of time? If you could just help us out with that, that would be great.
Sure. So let me just take the core business for a second. Let's leave out the new initiative because there are way too many moving parts there. So talking about the core businesses, our total acquisition plus brand spend year on year has increased from about 152 crores last year Q1 to 169 crores in the Q1 this year. That's about an increase of 11%. Now, with this, what I'm also clarifying is that 159 crores of the acquisition and brand spend that you see last year would have been on account of new initiatives, and this year that's about 126 crores. So let's again park that aside. So there's been about an 11% increase in the acquisition marketing cost, and overall you've seen that the revenue has grown by about 32%. So there's obviously been some efficiency gain on this front. As far as the operating costs are concerned, which is the contact center, etc., that has stayed flat with respect to revenue. So when I look at the core business, it's pretty much the same. So that percentage has not changed. But on the marketing side, there's been further efficiency, which has been gained. The renewals have, of course, kept increasing. As I explained, the renewal run rate this quarter at a ARR basis was about 418 crores, and last year same quarter was 273. So you are seeing somewhere around 40%-ish growth in that, and that is the same. So you will see it across the board, which obviously helps us have better margins every year. Yeah, that's true, and nothing changes in that. Yeah, so the renewal growth rate is a very steady growth rate over the previous year, and of course calculating it is complicated because sometimes there are multi-year policies, etc., etc. But at the heart of it, for our core businesses, renewal on renewal is between 95 to 100% on a premium basis, and we continue to have higher renewal rates than the rest of the industry. So feel good about all of that. Yeah. I don't know if I've answered the question, but
yes, just a quick follow-up on that. So, if renewals have been doing well and our performance marketing cost has been growing slower, so how does one reconcile the fact that year-on-year contribution margin expanded, just 0.3% in the core business. Is Paisa Bazaar in the mix got to do with something in this? Just finding it difficult. So one would assume that if ARRs of renewals are growing this fast and some of the direct costs are cooling off, that contribution margins would actually, move northwards.
See, if you look at the insurance business, the renewals is about somewhere between 20-25% of the total. And you're right, that comes at almost 85% contribution margin compared to the new business. But since it's very small percentage and that percentage improves, but it takes time. Every year you will see that it's improved by a few percentage points. So obviously, if it improves by say roughly 4-5 percentage points in a year, the impact will be 2-3% out of it. Yeah, that is definitely contributing. And then apart from that, you do have efficiency which are coming because of efficiency on marketing and the whole revenue per lead or revenue per inquiry.
No, so it's moved from about 42% to about 45%. That's a 3% delta. I don't think our renewal revenue would have moved by 3% delta on the overall revenue piece. So yeah, I think what Alok is saying is these are steady changes. They don't have a dramatic change. I think we gave some odd guidance on this that, over a 4-5 year period, you should see 5 to 10% delta coming because of these factors. But it's a slow move, and you're seeing 3% of it show up within a year, right? 3 percentage points is very significant in that year.
Across both brands.
Yeah, that's across both brands, Policy and Pesa.
Got it. Thanks, guys, and congratulations that on the quarter-on-quarter numbers in the core business have surely been a pleasant surprise. Thanks a lot. I'll get back to the question.
Thank you.
Thank you, Srinath. Hi, Pujan, please ask your question.
Yeah, hi, sir. Just one of the bookkeeping question would be, if we look at the segregation of our revenue, we have split it into many verticals. So there are a few verticals like insurance commission, then outsourcing services, and third is online marketing and consulting, which is a significant impact on our, have a significant share of our revenue. So just wanted to know what is included in each of these three things. Firstly, I got to know that the insurance commission, I understand very well, but just wanted to know on the outsourcing services and online marketing and consulting. So what type of services we provide and how we earn the revenue and how we are being is it been a annuity stream revenue or it's been a lumpy thing? Just wanted to know that, sir.
Sure. I will clarify one thing, which is actually quite material. And you should have some clarification on that, which is the advertising and promotion expenses. I'm just breaking this out so that everybody can see it very clearly and just note it down for your, interest. So of the 456 crores of total advertising and promotion expenses that you see in March 31 quarter, 298 or almost 300 crores was towards new initiatives, right? And 158 crores was towards core business. In the current 198 crores of total advertising and promotion expenses, only 34 is towards new initiative and 164 is towards core business. So what I wanted to explain was, and if you go back to last year, of the 289 crores in the same quarter of advertising and marketing expenses, as per the statutory results, 146 was towards new initiatives and 143 crores was towards core business. Now, once more, I say statutory results are statutory results. Eventually, we have given a management view of things. They will both consolidate at the same level. But I think this clarity was much needed because there is a classification change in some of the advertising and marketing expenses which were being undertaken for new initiatives. And that change is essentially appearing in what we know as other expenses. So to give you an example, year on year, if the new initiatives, marketing and advertising promotion costs moved from 146 crores to 34 crores, then clearly there is about 90 crores of this or 80 crores of this, which has moved from here into other expenses. I would leave it at that. Other than that, quite honestly, maybe Mandeep gets into it. I actually don't even get into what these stat level things are, as long as they consolidate at the same level with the management view.
Hello, sir. My question would not be on the advertisement expenses. I am talking about specifically on the revenue segregation, what we have been presenting in the annual reports, and we have also presented in the DRHP. So if you look at the
Hi, this is Mandeep. So your question is regarding the segmentation of revenue. So if you look at our annual accounts, the revenue is essentially split into insurance and non-insurance kind of revenue. And within insurance, you will see commissions, rewards, and outsourcing revenue that comes to us in an insurance segment. Non-insurance segment is largely for credit related revenue. That basically Paisabazaar revenue, and it used to include all advertisement and marketing that we were able to garner in Paisabazaar as well. So that's the primary breakup of the segments of revenue that we have in our annual reports.
Yeah, got it, sir. But one of the things is, if we are looking for the outsourcing services, what are the specific services we provide so that we get that specific revenue generated via outsourcing? So what is the specific?
We do not get into that level of clarification, please.
Okay. And my second question would be just bookkeeping would be, if we look at the 14th page number 14, so revenue run rate is showing at 340 ARR, and while somewhere the other way I look at it, it is showing at 418. So renewal rate is 418 ARR.
I think this is split between policy and
it's total in one.
Yeah. So the 418 number that you see is the total ARR, and 340 is related to the specific business, and you will see a balancing number in the later part of the presentation as well.
Okay, got it, sir. Thank you so much.
Thank you, Poojan. Next question, Sachin, please ask your question.
Hello. Yeah, hi, this is
Hi,
Sachin. Hi. Quickly, I mean, on the 1000 CR PAT guidance that we have had for some time now, right? So I wanted to check your confidence level there. Looks like it's easily achievable now. So do you feel that the number can be preponed, can be increased, or how does your confidence level on that look like now?
It's the same, yeah. Nothing's changed there. Everything is the same. Nothing in our mind has changed. Only for this year we are a little more confident because, that's all. But I think as far as the 26-27 guidance is concerned, we are just as confident as we were. Nothing has changed in our business dramatically that makes us think more positively or less positively about the future, about the medium-term future.
Sure. Another question on the corporate insurance piece. Now, this is more like a housekeeping question. That segment used to appear earlier. Now we do not see it in the presentations anymore. Are you like tuning it down? How
No, nothing of the sort. It's 222 crores of premium came from the corporate business last quarter. Nothing of that sort. It's just we didn't have anything special to say, so we just didn't say it. But otherwise, yeah, that's it.
And what will be the premium from PB Partners business, if we can ask that?
So I think the total between PB Partners Corporate in Dubai is about 750 crores. And and 220 is corporate, 100 plus is Dubai.
713.
Yeah.
713.
Sorry, it's 713 crores exactly. 222 of which is, corporate, and rest is between PB Partners and Dubai.
Understood. Looks like that way PB Partners has declined very, very sharply. Is that the reading that you are getting as well?
No. I think if you look at it from Q4 into Q1, it has declined, and that
So
is to be
even-
expected.
So
No, Q1 to Q1, it is roughly at the same level on the overall business, but on the, as I think was said in the opening remarks, the nature of the business has changed quite dramatically. So business coming from retail agents is up 90% year on year, whereas retail that was coming, business that was coming from larger agents has gone down significantly. So it's a mixed shift between in the business, which makes the overall business look flat, but within that is a very steep increase in the retail business.
Sure. And I think the reason for this mix shift is that you find the retail business to be more sticky or sustainable.
Exactly. It's more sticky, it's more sustainable, and it comes at better economics. But it's much harder to do also, right? That's why it's taken us time to, get to this point.
Fair enough. Just one final question, if I can squeeze in. The CM for new core business, if I try to sort of triangulate that basis, the contribution margins that you've been sharing, it comes down somewhere around the 15 to 20% range. Am I reading that right?
So I would usually, so we haven't done this, we could track it, but the point is, usually I would ask you to desist from focusing on new business margin, because it doesn't make sense. If health grows faster than other categories, you will see our margin decline, because health on new business is a zero margin category. If you appreciate what I'm saying, right? Because obviously it's a high NPV category. So I wouldn't go too much into new business margin and renewal margin. Overall, there is a business margin which keeps improving as renewals keep growing. And eventually, the way we look at it internally is an NPV way. So we don't look at these businesses from what is a new. In fact, let me put it very simply. In our internal reviews, I desist our team from looking at new business margins, because sometimes makes wrong decisions. Because as you can imagine, whenever we review health, there would be a sort of sometimes a desire felt of being positive margin on new business, and that actually is not a very healthy thing to do, because obviously the NPV is way higher, and I would rather that we were at 15-20% negative margin on the first year, but we're growing much faster. But so you appreciate what I'm saying, right? So I think the business mix decides the margins quite a bit. But on the whole, we feel good about our margins on the core business. Nothing has changed. Everything seems to be on track.
Fair enough. Thanks so much.
Only thing that's happened this year is our core protection businesses have grown faster, and I'm quite happy about that part.
Great. Congratulations and all the best for the rest of the year. Thank you.
Thank you, Sachin. Madhukar, please ask the next question.
Hello, am I audible?
Yes.
Yeah. Hi, congratulations on a good set of numbers. So one data keeping question, can you share actually two? One, your credit revenues, and second, your renewal premium number. And third, your total premium growth seems to me a little bit on the lower side at 24% growth. Is it obviously part of it is because POSP is not grown that much, but even if I exclude that, it's probably at about 25% if I'm not wrong. So your comments around that will be helpful.
I will leave to Sarbvir to comment very specifically, but I will give you the base data so you have it. First of all, Paisabazaar credit revenue, let's call it credit revenue. Let's not get confused by Paisabazaar revenue or Policybazaar revenue. Credit revenue is 134 crores for the quarter. Leaving that aside, you're absolutely right. On POSP, in terms of premium, there was a -6%. It's not significant, but it's -6%. Please appreciate this is a business which we can grow very rapidly and control, and we'll keep doing things as we progress. And there's been a big shift in quality. Also, the savings business did not grow. So if you really think about it, savings was a little below last year, same quarter. And that was a big part of the business. So savings was almost, as big. New savings alone was almost as big as health and term, or even bigger at times. So I think that does play a role. The protection businesses have kind of grown well. And you're right, on the core Policy Bazaar business, your numbers are about right. The 25% would be about the right number. And the new to renewal split across the board, since you asked that particular question, we are equally split at about 1,500 crores renewal, 1,500 crores, a little more towards renewals, about 1,600, 1,400. Sorry, sir, if you had any specific comments on any of the business lines.
No, I think Yashish covered the whole point. The savings business in the first quarter was somewhat weaker than it's been historically. So if you see last year, we've been always talking about savings being a big driver of growth. This year, because of March, so I think there was a big external event in March when the tax changes happened, because of which the entire market has been a bit subdued. That impacted us as well. Other than that, I think the businesses actually continue to grow very well.
Right. Thank you for the answers. I'll get back in the queue.
Thank you, Madhukar. We'll take the next question from Mr. Sachin Salgaonkar. Sachin, please ask.
Hi, thank you for the opportunity. Just following up from the question which ended, guys, just wanted to understand, what kind of a premium growth ideally we could look going ahead. One gets a sense that, savings is a bit, muted, but, clearly other businesses like health and others are doing well. So can one look that, for this year, 24% is more like a bottom growth, and from these levels, growth, premium should increase?
Sarabir and me are both smiling. I think we are very, very comfortable where we sit. We've had a tough quarter, no doubt about it, but we are very comfortable where we sit. As we review our numbers, everything seems to be surprising us positively. So, but I'll hand over to Sarabir. He's the more moderated one in such answers. But yeah.
No, I think, Sachin, we would not like to, give any kind of
I told you,
any kind of forward-looking guidance, but I agree with Yashish. I think based on where we sit, we do hope and we expect that the industry will do better than it did in the first quarter. And I think if the industry does better, then we'll also do better, is how I would put it. We are finally a function of the industry.
Got it. Second question, just wanted to understand, when I optically calculate the commission rate, which is, your premium and revenue divide. So on a, quarter-on-quarter basis, it does show an improvement of 12.4% to 16.8. I presume this is a bit on the back of reclassification. So on a, apples to apples basis, possible to understand, how the take rate has improved?
So our take rates have not changed in any material way. We have nothing much to report. There will be some business, mix changes, because obviously the protection business does usually have a slightly higher take rate, but nothing material. And I also, last quarter I mentioned that, sometimes there is quarter to quarter shift of 5 to 10 crores of, which is, if you think about it, on 500 crore of revenue, that's roughly 2-3% here or there, because you can't have everything exact, right? So just some extra issuance may happen 1 month, some extra, some low. So I would say just expect that. So maybe 10 crores here or there, and look at this shifting over quarters rather than 1 quarter. There could be some billing arrangement that means that, there's some incentive mark or some award mark you hit earlier, various things. So don't get, but the base answer is no, there has not been any material shift in any of our take rates. Would that be right, sir?
Yeah, absolutely. I think the only change in first quarter this year versus last year is the improvement in mix for the protection business. So protection is a larger portion of our mix this year. So that's why you see a small delta in the take rate.
Got it. And, if we think about the renewal mix, any broad understanding of, how much is between your own and POSP?
POSP is almost insignificant as a part of renewals. Like last quarter, our POSP renewal, we usually don't give these numbers, but it's like meaningless. It's like a few tens of crores at most.
Okay, very clear on that. And Yashish, as we speak, no significant or, absolutely no updates on Bima Sugam, right?
It's a great platform. I think it'll do really, really well. It's obviously initiated by the government and by all the insurance companies. We, as part of the IBA, are also part of it. And we think it's a phenomenal platform here. So yeah, that's where we are.
Sorry, I wanted to understand from about the launch time and date, any updates per se from that perspective?
Look, I'm not the right person to comment on that. Yeah, please appreciate it's a regulated it's a regulated initiated platform. We are a regulated entity. For us to comment on an initiative of the regulator, you're putting us in a very difficult position.
A fair point. And one last question, general thoughts on competition. We have seen PhonePe getting a bit more aggressive into insurance. Media articles indicate Jio Financial Services is also looking at that. Any broad thoughts?
So our view stays exactly the same. The second largest player in the market is none of the names you took. We will not name them, but they are following pretty much our model. So we think our model is a good model. We are very confident of it, and almost nobody's even heard of their name. But they follow exactly our model, and yeah, they're the second largest player. So I think platforms having almost half the country's traffic on them are also not able to get as much volume as somebody who's almost unknown. So I think the model is very clear. This is a customer support model. Whoever has to compete eventually has to build exactly what Policybazaar has, is my opinion, because health and life is like that. But I would refrain from commenting more. Yeah, we don't want to. Yeah.
Got it. Thank you. And
I just
best.
want to add one thing to this,
Yeah.
that I think the best way to think about this is that there is a huge insurance market opportunity, right? One is here and now, and one is the growth in that opportunity. And I think the idea is to get more and more customers to, first come to Policybazaar and then buy from us. So I don't think it's just a platform versus platform game. It's actually a very big market opportunity, and we are one of the players in that market opportunity. So I personally feel that one should not look at it in a narrow way in terms of digital or something like that. It's a very broad set of people who sell insurance, and we are one of them.
So we did I just put a little more color on this. We were talking to our agents recently. We do that, like Sarbi does that all the time. I was doing it quite once in a while. And I asked them, what is the common trait between customers who come to you? And almost all of them said that somewhere their query was initiated by an incident. That incident could be the death of a colleague, friend, family member, or a big disease or a big medical bill. So these are incidents. When that incident happens is pretty much the only time a person thinks about purchasing one of these products, right? Where the customer has no immediate benefit, nothing whatsoever. But when that event happens, the reality of it gets triggered to them, and they decide to buy this. And when they do that, it seems like the most trusted name out there, or the most obvious name out there, seems to be Policybazaar, at least from the digital search perspective. And so bulk of them come here. And then they need a huge amount of hand-holding in purchasing this product, because it's not that straightforward. It's very easy to say that buy health insurance, etc. It's actually a hard product, and you have to manage two sides of the risk. You have to manage the information that the customer is disclosing, and you have to make sure that the customer doesn't get missold a product. Sometimes you almost have what you call false starts. A false start means you could get volume, but that could blow up at the other end in terms of claims ratios. And we've seen lots and lots of those in the industry, and people are aware of those, right? So you have a lot of false starts, and for a while you could sustain a false start, but you can't sustain them at scale. So I'll kind of conclude there. That's the kind of thought through, deep analysis of the situation here.
I'll just add one more thing here. See, when you talk about competition, technically anyone who is selling insurance is a competition, whether it's a bank or agent or any platform. But at a very high level, the way you need to look at industry is the customer thinking about insurance or not? So, if someone wakes up in the morning and thinks insurance, what really happened? Do they come to Policybazaar? Do they go to someone else? On the other hand, there are a lot of people who are able to sell insurance to a customer base who is not thinking insurance. So pull versus push in a way, right? So from that perspective, as Yashish said and Shavi said, there are people who are trying to do a bit of what we are doing. But yes, there are lots and lots of people in India, obviously, who are selling insurance, and there are a lot of banks who are selling insurance and have got a huge amount of volumes. So from competition perspective, technically everyone is a competition, but our whole effort over last so many years have been to first make customer aware that you need to have insurance as a core part of your financial planning. Second, once you think of insurance, come to Policybazaar. And third, once you come to Policybazaar, you buy through Policybazaar. And we are sort of in the third phase now, where a lot of people have already sort of have a brand recall of Policybazaar.
Thank you, Sachin. Next question, Mr. Yash Gandhi. Yash, can you please ask the question? Hi, Yash, we can't hear you.
Is the call on?
Yes, the call is on.
Move to next.
Okay, we'll move to the next person. Ankush, please ask your question.
Yeah, hi, thank you for taking my question. Just a small clarification. So in our result release, we have taken board approvals for some infusion of capital in both Policybazaar and Paisabazaar. So can you clarify what's the reason for this? Any specific reason? Because since now the subsidiaries are profitable, I think they should be throwing cash back to the holding company rather than be infusing cash. So any specific reason?
Yeah, I mean, if you look at our RHP filed at the time of IPO, we have clarified that this money is raised for 5 objectives, which have been mentioned in RHP. Those objectives are delivered through our subsidiaries, and to enable spend and allocation of funds as per the plan, we are transferring every year. We transfer set of money to those subsidiaries, which will be incurring for the objective mentioned in IPO. Accordingly, we are transferring about 700 crores in Policybazaar, 200 crores in Paisabazaar, and 200 crores in Dubai. This will be infused over a period of time as and when the funds are required in subsidiaries. And this is as per what we have filed with SEBI in our IPO documents.
So this is purely to meet what we had disclosed at the time of RHP, and it got nothing to do with the capital requirements as such, right? Okay.
So you're right. As a group, right now, we are generating cash. Last quarter also there was a positive cash generation of 18 crores overall compared to March end. So yeah, I think we hope to generate cash of almost 400 crore plus this year.
That was helpful. Thank you.
Thank you. Next question will be from Mr. Rishabh Parekh. Rishabh, please ask the question.
Hi, guys. Congratulations on a very strong quarter. I just had a similar question to the last question. What would be, if we're generating 400 crores this year, what would be the overall use of our proceeds? Have we, thought through this further, some clarity on how we will deploy our cash?
So, of course, the IPO proceeds are being utilized as per the RHP. However, you are absolutely right. We have more than 5,000 crores of cash on our books right now, and we are adding to it every quarter, and we'll keep adding to it. So yes, in the next, my expectation is that by 26-27, we should have maybe close to 7,000 crores or so of cash, which is an interesting dynamic, and we need to think about utilization of these proceeds. So we will, with the board, deliberate beyond March 24 what we do with these funds, but we have no specific plans as of now in terms of usage of that excess capital. At this point, we don't have anything to report on that. We do have ideas, but they are not mature enough to be, disclosed as a public company. They're just management ideas as of now. We've not even gone to the board with them. But it's unlikely to be acquisitions, just clarifying. Very unlikely to be any major acquisitions.
Yeah, because, understood. Thank you.
Thank you, Rishabh. We'll take the next question from Bhavya Sangvi. Bhavya, please unmute yourself.
Hello. Thank you for the opportunity, sir. My question is related to the physical expansion, the store expansion that the company is doing. So it's been some time that, the stores have actually been, developed, and wanted to understand the things that are, improving the metrics. basically premium per inquiry that you fulfill through the physical store where the inquiry is online, or the walk-ins. So how the size of the policies or premium per policy is different from the online business, and do you see material improvement or deterioration in the margins from the business done through these stores? Thank you.
So our physical business, as you know, has we have almost 1,000 people deployed on that. We sell life insurance and health insurance, where we offer to meet consumers in their homes and offices. Right now, since it's it's something that we started about 18 months ago, it's continues to improve in terms of productivity. Just to give you a sense, in our savings business, the ticket size when you meet somebody is almost 45 to 50% higher than it is on the phone. In health and term, it is higher, but by a smaller amount, because as you can imagine, things don't change that much for the family or for the person, whether you meet them or you don't. So I think overall, it has added to our conversion rates. It is added to our efficiency and productivity, and it continues to do that sort of quarter after quarter. And we are very, very happy, and we are adding to our capacity as we go along. So this year we will add to that capacity. We'll open new cities as well as new locations where we'll be present. So I think this is now a leg that is there, and I think it will continue to grow in importance as we go along.
Thank you. Yash was not able to speak because his mic is not working. So I'm reading out his question, which he sent to us on the chat. Question number 1. Any impact on take rates due to EOM, and any guidance on that going ahead?
So as we said, EOM has come into place as of 1st of April this year. And we have not seen any impact from EOM in any of our product lines on the overall take rates of our business, and we don't expect to either. That's right. So,
yes, absolutely.
The second question is, what percentage of POSP business was retail versus corporate last year, and where are we this year?
So as I don't want to go into exact specifics, but as I explained, our retail business is now a very significant portion of our overall business, and last year it wasn't. I think we'd like to leave it at that. It's a competitive market, and I think this is a bit of detail which we can avoid.
The third question is, contribution margins are at 45%, despite annualized run rate going higher, and this quarter savings was also subdued. Any comments on the same?
I think savings being subdued, hopefully was a quarter matter. Hopefully by the time the year is over, we may have a different story to tell. And the margins at 45% is what we would have expected. If you asked us, although we never say these things, but if you had asked us last year what we think our margins would be about now, it would have been in the similar ballpark. So yeah, I think no surprises at all. As I said, it's a pretty boring business. It's just, yeah.
I would just say that 300 basis points improvement year on year is a significant improvement. And I think I'm not sure we can be too defensive about it.
Thank you, Yash. Next set of questions will be from Sanskar Singhal. Sanskar, please ask your question.
Yeah, hi. Am I audible?
Yes.
Yeah, thank you for taking my question. So, just had a curiosity question, like what percentage of premium must be coming from the offline segment that we ventured into, the non-POSP business, like?
Roughly 20% of our life and health fresh premium comes from our offline visit capability.
This is the non-POSP one, right?
Yes, absolutely. We're talking of our core online business. So if in life and health we do 100 rupees of fresh premium, 20 rupees comes from the FOS capability that we built.
And just to explain, this just means the closure happens or the last meeting happens offline. The customer still comes to the online, to the website or the app.
And he's probably spent a lot of time talking to the person in the contact center. It is just, yes, somebody also meets him.
Yeah, got it. And also another medium term to long term question, like I know it's have been repeated in the past call, but just to get a more clarity as to what, according to you, what are the main drivers of medium term or long term growth, and how you are planning to outgrow, how much, in what sense, the industry, and within that, if you can share some color on the segmental growth of each of uh, the products that we provide.
Sure. So see, there are two parts. One is the revenue growth, other is the EBITDA growth. Revenue growth, as Ravi had mentioned earlier, we are not decoupled from the industry, but the way we have been executing over the last so many years, we believe that we should be able to grow 2 to 3x in life and health. And that's been sort of a guidance we have been maintaining for some time now. If industry grows at 10 to 15%, that automatically means that we are looking at a number which is near to 30% growth for life and health put together. On the EBITDA part, it's actually quite a simple business to understand. There are 3 operating and 2 non-operating pieces that you will need to just track. On the operating piece, there is fresh, new, whatever you want to call it, the core business growth on the new side. The second is the renewal growth on the new side, or on the core side. The third is the new initiative and how much we want to invest in those initiatives. Then on the non-operating side, there is the ESOP charges and there is other income. Now, if you just think through, renewals, ESOP and other income are almost automatic. They just happen because of the base. And that sort of explains 80% of the delta from last year full year EBITDA to what we are projecting for this year or what we want to achieve this year or in FY27. But you just need to have clarity around these 5 pieces and how they move, which will just explain the whole EBITDA story. Growth, I already mentioned that hopefully 2 times or more of the industry for health and life.
And what we notice is, look, we, as Alok mentioned, and I think I mentioned in the last call as well, Tapan Singhal sir from Bajaj Allianz said it very well to me once. He said the industry always grows together. It is not like one player will grow and the rest of the industry will go into the dumps. That never happens. Usually, right? You may have player to player shift a little bit. And so that's what we've noticed, right? Last year was a tough year for protection. And so we also struggled last year. This year, protection is somewhat coming back. Although, health growth is still somewhat complicated for the industry. But for us, we are definitely seeing the benefit of being 2 to 3x of that growth rate. And, this year, broadly, except for certain push channels, savings has been a bit challenged. So for us also, savings is being a bit challenged. So it's not like we can decouple from the rest of the industry. But yes, we will, in most situations, give better growth than the industry and thus keep taking market share. We are still a very small market share. We are, yeah. And plus the area we focus in will hopefully grow faster than the rest of the industry, because protection is what we are focusing on. Thus, health and term we expect to grow in a long-term basis faster than the rest of the industry.
Right. Additionally, actually, I might have joined the call a bit. I'm not sure if you have repeated. What were the headwinds you might have faced in the POSP business in this quarter? Just if it hasn't been repeated already.
Yeah, I think the guidance we've given you is on new initiatives. We will spend somewhere between 150 to 250 crores every year. That's the broad range we'll be in, right? At some point, we will reduce it. Beyond that, it's not too material to get into exactly what is happening in one particular quarter. I'll give you a very simple example. If you think about cycling races, sometimes, and if you think about all of them, they're almost all decided at the last 1 kilometer. And the person who's leading the race almost till the end is the one who actually loses. Because it's the others who are, so just reducing volume or increasing volume, actually in the POSP business does not mean too much. We can, as you saw, we could have, last year there was almost 600-700% growth, or maybe even 1000% growth over the previous year. This year you will see maybe 10% plus, 10% minus. Next quarter you may be surprised by it totally. Even we might be surprised because we will keep changing our tack from quarter to quarter on this. And that is the competitive nature of the dynamic here. Now, the question is, you may trust us or you may not trust us. If you trust us, you will believe eventually we'll win. If you don't trust us, you can believe we will eventually lose. Either way, it's not a very material outcome to the overall organization. And that's, I think, the point you have to take home, because the core business profitability will grow enough to dwarf any profit or loss coming from new initiatives. Just give us a bit of time. I think you will see that happen.
Okay. Thank you so much. Thank you for that.
Thank you. We'll take the next question from Nidesh Jain. Hi, Nidesh, please unmute yourself.
Hi. So a couple of questions. Firstly, can you break up the EBITDA for Paisabazaar and Policybazaar for the quarter?
We don't break up EBITDAs for the quarter by kind of business lines that way. But overall, the core business has made what, 69 crores of EBITDA, adjusted EBITDA, 69 crores was it a core business. In this, we don't really break it up, but a bulk of it would be insurance, and a small amount would be credit. But I'd leave it there. We don't give the breakup, so we're not giving the breakup here. That's all. Because sometimes it's down to allocations, right? Where some cost gets allocated, etc., etc. So we just leave it there.
Okay, sure. And secondly, what is the growth in the new business, new premium health insurance side? Because I think health insurance is the most important piece of business for us. On the retail health insurance, what is the new premium growth by in this quarter?
So the date we have mentioned that somewhere between 2 to 3x of the industry growth rate. Let's leave it at that.
Nidesh, is a sensitive item because we live and work in the industry. We've given enough guidance with protection being at whatever rate. It's not extremely different from the protection element. It's not like term is growing at 80% and health is growing at 0. So if we said about 40, they are in the same ballpark, but we don't want to be very specific. In fact, I didn't even want to be that specific because that also has issues with our declarations.
Sure. And lastly, the NPV to direct cost ratio that we have been talking about, how that is trending?
That stays at the same at about 2.8x as of now, NPV. But again, that's an internal calculation. So broadly, our NPV to direct cost ratio is at about 2.8x, and that includes acquisition marketing. We hope to take it to 3x at some point in the future. That's the objective. So the target is 3x.
Thank you, Nidesh. We'll take the next question from Sehaj. Sehaj, please unmute yourself.
Yeah, hi team. Congratulations on a good set of numbers. Hopping back on the POSP business, just one clarification. So if I look at the contribution margins, the margins have been quite volatile in this business. So I mean, when you are doing this POSP business, what is your sort of objective of doing this business? Because at the end of the day, I mean, if you look at look at it from a 3 to 4 year point of view, where do you see the contribution margins trending? Because the delta can be huge, right? From minus 10% to even a 0.5 or 1% contribution, positive contribution margin, the delta to our profits can be huge. That is one. And the second one is on the renewals business. I mean, why would the POSP business not have any renewals? Generally, that is how your contribution margins tend to improve, right, on the renewals business. Yeah.
No, so I'll take the second one first. The POSP business will have renewals. It's just that because it was a new business for us, the renewals will come over a period of time. Secondly, the renewal rates in the POSP business tend to be much lower than the renewal rates in a direct online business. So there will be rollover. So those people will move to, buying fresh policies of other companies. So those are that is the nature of that business, right? In terms of the first question as to at least the way we look at it, last quarter where you're referring to was +1 and this quarter overall is -10, right? For all the three businesses put together. I think to my mind, it's not such a big change. I think these are corridors of, how businesses operate. Last quarter, fourth quarter was very special in terms of the life business being a very, very large portion of the overall pie, etc. So I think it's in a very good range. And if you see, it's consistently moving in the right direction when you look at it year on year and even sort of sequentially. I think the reason to do the business is very, very clear. I think there is a large portion of the business that is done by agents in the country that will always remain there. Agents need an efficient platform from which they can serve their customers. I think that is the platform that we have built, that we are building. And as our platform becomes more and more sophisticated and more advanced, I think the economics will also keep improving. And you will see that the numbers will go in the right direction. But it's something that one need not move too quickly on, because the shape of the business should be correct. We are happy to invest in that business for the next few years. As I think Yashish and Alok have said, 150 to 250 crores a year on the outside is what we are willing to do. And I think in that we'll be able to build a very, very nice business, and you'll see that as we go along.
To get a bit more specific, Vedam, I'm eager to kind of answer this, although it may be kind of giving out too much. See, our fixed costs in that business, in the whole POSP business, if you would, are broadly about, let's say, 35 to 40 crores a quarter. That's our fixed cost of technology, product, manpower, etc., etc. After this, essentially what you have is payouts. And, one quarter you might do 2% more payout, one quarter you might do, and we are figuring out quality, we are figuring out things. You would expect someone like us to be fairly mature about how to play this out, and at the same time play to win. And there will be, moments of weakness and moments of strength and various things. So I think leave it at that. I think what you will find is, as we build out our overall, volume in this area, it will not have a material impact on profitability either way. It, like Sarbir would agree, it can't be more than 10% of our profits or losses either way in 26-27. Both ways it won't be. So it's not going to be a material impact. It gives us huge volume credibility. And let's get this right? There is physical distribution is a big part of the industry, and enabling it through technology is going to be a big win point. The final winners will be the ones who are able to get the technology right, but also the data right, and all the analytics right. We have a huge amount of experience and a huge amount of understanding of this. It will also require operating profit strength, which our core business provides. So I think the final victory, and if you really think about it, imagine if you did not have the core business and you were running only the POSP, then that question which you're asking would be quite valid. That why exactly are you doing that? Especially when there is somebody there who can support this POSP business for a very long period through core business profits. It would be, so that's a very valid question, right? But I think these are all cycles here. And for us, we have to just wait out the cycle, and that's it.
Got it. Thanks for the detailed answer. I mean, just one on the GST issue, which is floating around in the insurance industry. Obviously, we haven't provided for any of those liabilities, but do you anticipate a big amount hitting our P&L if in case hypothetically it comes through?
Well, I mean, just to provide you an update on what's happening on GST side, we have provided all information or clarification which have been asked by authority relating to various, discussion they are having with the insurance industry. We haven't heard from the authorities after that. We are not expecting any hit, any significant hit or any hit on us as of now. Let's see how it evolves, because the issue is complex for the industry. Let's see how it evolves.
Got it. Thanks for answering these questions and all the best.
Thank you, Sahaj. We'll take the last question from Nischint. Nischint, please unmute yourself.
Hi, am I audible? Hi, am I audible?
Yes.
Yeah, sorry about this. My question actually pertains to, Paisabazaar. We've kind of crossed almost like 1,000 crores of disbursements a month, probably around 40-50 crores of revenues. So just trying to understand, what is a point in which we sort of see the J curve of profitability?
Nishant, thanks for asking. We are at about 1,300 plus crores of disbursements, like you said.
Yes.
You're starting to see the profitability improvement, like we mentioned. This is the 7th month now, 8th month that we are profitable since December 22. Our focus is to continue to now increase the EBITDA to revenue ratio. We would be operating at about 6-7% already, and you will continue to see improvement in that metric, and hence the curve is moving in the right direction. We are seeing, and that also is evident from the fact that when you see the contribution margin Q on Q is staying broadly in the 40 to 45% range as we grow the top line by about 50 odd percent or plus. So in terms of absolute amount, if we are generating about 45% or so margin, a reasonable part of that starts to add to the profitability.
So what size of revenue or disbursals per month do we really see to achieve the optimal, maybe 30-35% kind of an EBITDA margin? I mean, are we like a year away, 2 years away, assuming that we are able to maintain this run rate?
We're not going to talk about that kind of far out in terms of the projections. But like I said, we reached 0% in terms of break even in December. We already had about 7%, and we have an internal plan to keep moving forward on the EBITDA margins. And with the growth of top line, the absolute numbers start to look attractive enough. I'd say that we are currently, our first goal would be to get towards 20% in a reasonable time frame, EBITDA to revenue ratio over the next few quarters. And once we get there, of course, we'll talk about the 20 to 30% journey. This is very tough to say a lot of these things. We have moved from minus 13% to very near to double digit right now in last 1 year. Now that's a very big change which has happened. And as we mentioned, the contribution number are very, very healthy, about 40%. So as the business grows, a lot of it will flow down because your obviously fixed costs and others are not going to grow as fast. But at what time we get to 30% is very tough to say, whether it take 2 years, whether it take 5 years. Obviously the effort is to grow as fast as possible in the reasonable, efficient manner. So if it happens faster, we'll be happy. Definitely we want to do it. But right now we are very, very laser focused on delivering a PAT positive year in FY24 and 1,000 crore PAT positive in FY27.
Just to kind of give you a bit of color on this Pesa story. Last year, our renewal revenue was approximately what? About 20 something crores.
Yeah.
This year, our expectation, again, we don't give guidances and all, but expectation clearly is maybe 4 times that. So now what you're seeing is a 75 crore delta come within 1 year. And let's see, right? Let's see. See, Pesa has, since the very beginning, Pesa has been always a strategic question mark and an operational positive surprise from for the last 8-9 years. For our pre-IPO investors also, for post-IPO investors also, strategically everybody always asks us, why are you doing Pesa Bazaar? Why are you doing Pesa Bazaar? Every quarter just keeps executing and keeps doing better every quarter. So I expect the same. Obviously 2020 was 21 was a special year when we had the COVID, and of course credit had a difficult time. We are also exploring if we can get a higher share of the revenue, because today Pesa is operating at a certain percentage, which I believe could potentially be higher. So I see lots of potential upsides on the Pesa Bazaar side. Let's see. Let's wait it out. I think it's going to be the positive surprise on that 1,000 crore number will be the Pesa Bazaar profitability.
That was the last question for the call. I now request Yashish to please close the meeting.
Okay. Thanks everyone for running the call. It was wonderful to have you here. We obviously are now taking investor and analyst meetings from now till the end of the quarter. So please do reach out individually in case you have any more queries. Happy to answer them and maybe have a meeting. Thank you very much.
Thank you.